Sikshayati, platform for eminent authors, engaging teachers, successful students. To know more, email. Goodwill. X and Y are partners in a firm X and Y, sharing profits losses at 5:3. Balance sheet of X and Y as on 1st January 2010 is: liabilities, syndicators 12,000, bills payable 8,000, bank overdraft 10,000, capital X is 40,000 and Y is sub 30,000, so total capital is 70,000. Asset, building 26,000, furniture 2,000, debtors 39,700, which comprises of debtors is 40,000 less provision for doubtful debts is 300, so that comes to 39,700. Investment 4,500, cash is 7,800. Z was admitted to the firm on the above date for 1/5 share in the future profits and to introduce a capital of 30,000. The new profit sharing ratio of X, Y and Z would be 5:3:1 respectively. Z, being unable to bring in cash for its share of Goodwill, partners decide to raise goodwill accounts in the books of the firm on the basis of Z's share in the profit and the capital contribution made by him in the firm. Furniture is to be written down by 800, stock is to be depreciated by 10%, the provision of bad debt is required at 5% of outstanding wages is 1,500, building revalued to rupees 30,000, value of investment is increased by 500, creditors included a sum of rupees 1,500 which is not to be paid off, so prepare a revaluation account and partners capital account. Step 1. Computation of capital. Z's contribution of 30,000 is 1/5 of capital. So the total capital of the firm is considered to be 1,50,000. Because that is 30,000 divided by 1/5, that is 30,000 into 5 is 1,50,000. So combined capital of X, Y and Z is 40,000 plus 30,000 plus 30,000 is 1 lakh. So the hidden goodwill is 1,50,000 minus 1 lakh is equal to 50,000. The goodwill distribution. The new partner is not bringing goodwill in cash. So the goodwill of rupees 50,000 would be credited in the old partners in the old profit sharing ratio, that is 5:3. So X will get 50,000 into 5 by 8 is equal to 31,250 and Y will get 50,000 into 3 by 8, that is 18,750. So the accounting entry, step 4, accounting entry for goodwill is goodwill account debit 50,000 to X capital account 31,250 and Y's capital account 18,750. Revaluation account. Revaluation account will show the entries as stated in the problem. So it will be credited by building. The revalued is revalued at 30,000. The old value is 26,000. So 4,000 would be credited. Sundry creditors 1,500 as stated in the problem, and investment is raised by 500. The debit side would be furniture would be 800, stock 10% on 20,000, that is 2,000, and for doubtful debts would be 2,000 is required and 300 is already there, so 1,700 would be another provision for doubtful debts. Outstanding wages is to be provided 1,500. Partners capital account. Partners capital account shows the following entries. In the credit side, the balance brought forward is 40,000 for X, 30,000 of Y, that is the balance as per previous balance sheet. Then by cash 30,000 is brought by Z as capital, so that is credited in his account. Now the goodwill account as shown that 50,000 is distributed to old partners in old profit sharing ratio. So 31,250 is credited to X, 18,750 is credited to Y. This 15,000, now the goodwill is, so the balance is carried for X is 71,250, Y is 48,750 and Z is 30,000 in the capital account. Thank you for watching the video. Kindly write your comments. Click on the red subscribe button at the bottom of the video to get more details and free ebook. Email us.